Today on Retiring Well, we're going to be talking about different strategies to keep your financial plan on track. So valuable. Also, income riders. What are they? How do they work? And financial advisor fees and costs. They vary for everybody, but want to be paying attention to that. And then lastly, brokerage account versus IRA. Which should you invest in? You'll want to be paying attention to all this and a whole lot more coming up right here, right now on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Stock market volatility has rocked many investors over the last year and a half. 2022 was an especially rough year. We saw the S&P 500 down nearly 20%, and even the bond space, bonds were down as well. You know, typically we have that inverse relationship between stocks and bonds, where if stocks are down, bonds are usually up. Well, that was not the case in 2022. The aggregate bond index was down almost 13% as well in 2022. And for 2023, there's been volatility continues. So for a lot of people, seeing all this in the market has really kind of put some damper on their financial plans. They're wondering, okay, am I still going to meet my goals and objectives in retirement? So what I'd like to do is go over a couple different strategies to make sure that your retirement plan is still on track. Okay, so one of the best things that you can do is make sure that you're planning those annual reviews with your advisor. Okay, here at Centennial Wealth, for my clients, I like to meet more than annual. I like to do every 6 months. So in these review meetings, we're sitting down, we're going over different life changes, because life happens, right? So much can change in even a 6-month time period, and we as your advisor want to make sure that we understand what's going on. Also in these review meetings, we're going over your investment strategy, also your investment performance. We're talking about income and expenses, and maybe we're making adjustments based on where the market's at and where your new risk tolerance might be given the circumstances. So it's an always good idea that you make sure you're planning to meet with your advisor on a regular basis so you can stay up to date and make sure that your investment plan is on track. The next one is to make sure that you keep a long-term perspective when you're investing. Okay, so like I mentioned there, last year was a rough year in the market, but typically the market is very cyclical. You got to remember, you're investing for 10, 15 years down the road. Okay, so the old adage, you don't want to jump ship when the water gets choppy. You don't want to do that in the investing world as well. You want to make sure that you stick with whatever plan you've developed, knowing that in the long term, your goals should come to fruition. Another prime investment strategy to make sure that you stay on track with your goals is to make sure that you continue to invest in yourself. Okay, this should be the #1 line item in your budget. Yes, you got to pay that mortgage, you got to pay the utilities and so forth, but make sure you pay yourself first. And what I mean by that is make sure that you're contributing to your retirement plan. Okay, I like the old 10% rule, where 10% of your income goes to your retirement plan. But at the very least, if you can't do that much, make sure that if you have a 401k or a 403b, that you're at least contributing enough to get that employer match. You don't want to give up on that even when times get tough. That's going to make sure that your retirement plan stays on track. And then we've got maintaining an emergency fund. Okay, this is cash on the side that you have in your savings account for those rainy days. Great example of the need for this is, let's say that you're in retirement, okay, and your roof, you need a new roof. That's pretty expensive expense, okay? But if you didn't have that savings on the side, and let's say you had to pull that money from your retirement portfolio, and let's say the market at that point in time when you needed a new roof was down, well, you'd hate to sell from your retirement portfolio to get that new roof if you didn't have that cash on the side for those emergencies. So it's a great way to buy yourself some time when life happens and you wouldn't need to touch that retirement portfolio, so that portfolio stays on track. And then finally, have a team on your side. So here at Centennial Wealth Advisory, not only do we do investment planning, which is a huge part of your retirement planning and making sure that your retirement plan stays on track, but also we've got health insurance planning. We've got a team behind the scenes that will help you navigate both Medicare and pre-Medicare health insurance when you retire. It's a very important plan or part of your retirement plan. Also taxes. Taxes are a huge part. We've got a team here behind the scenes that'll help you navigate those different tax strategies in retirement.
If you like watching Retiring Well, make sure to go to youtube.com/retiringwell and click the subscribe button to never miss any of our TV shows and other informative videos.
Remember when life was simpler? When things didn't move quite so fast, and the world didn't seem so complex? Remember that? We do. And as the world around us has continued to speed up, becoming more complicated, and still a bit uncertain, we have managed to keep things simple, providing sound, easy-to-understand financial advice and customized roadmaps for the road ahead, from tax reduction strategies, investment advice, and guaranteed retirement income you cannot outlive, backed by the claims-paying ability of insurance companies. We can be your single point of contact, a single call, a voice you recognize well, and a partner who can be by your side for the entire journey. We can't stop the world around us, but we can help ensure you're prepared for what's to come. To schedule a no-obligation meeting, simply contact us today.
When you have confidence in your retirement future, you can live the life you've always imagined. Because of planning, you now have time to reflect on the wonderful memories of your life. You and your spouse finally have the luxury of leisure time together. To spend fun times with your grandkids, sharing the joy of their excitement about life. Smiling at the thought of quality time with your children and of picking up the check. At last, you have time to breathe and rekindle the love of your life. Why? Because you imagined what could be. You planned for retirement. So today, you own your future.
Let's have a little education here about income riders. Now, these typically are optional features that are usually tied to some form of annuity. So you may or may not have a fee associated with this rider. So what do they really do? Well, for the most part, an income rider is offering you the ability to take at a specific time or optional time a guaranteed form of income, often payable over the rest of your life for as long as you shall live, or potentially, if you're married, over you and your spouse's life. So they're going to have some divisor built into that, some calculation that is going to take a value and it's going to have a payout percentage, and then that's going to come up with either like a monthly or annually payment to you for life. And so then usually you aren't able to name a beneficiary with the subject of having a spouse, but once you're both gone in that situation, the payments typically stop at that point. So then there's a underlying investment, the annuity, that may or may not have a cash value at that same time. So what are the advantages of these sort of situations? Now, it depends on your situation, so it may not be an advantage for everybody, but oftentimes you have a payment for life. So having that cash flow over time with the let's call it, subjectivity to markets or the unknowns of other investments, so you have that fixed payment often. So that's an advantage for some folks. You know, having that payment for as long as you shall live. So an advantage would be if you lived a very, very long life, you would have that payment for a long period of time, correct? What would be a disadvantage to this? Well, there's maybe an opportunity cost for another investment that potentially could perform better, unknown, right? So, you know, once you start this, usually everything is kind of a fixed number, fixed payout, that sort of stuff. Leaving money behind. You know, it may or may not be the best way to leave money behind. So depending upon, once again, your goals for this money. So when you're considering these and looking at all the different investments that are out there, you really have to look to see, what am I really trying to accomplish? What are the things I want to tackle the most, and what is the most important to me when I'm doing this? This checks a lot of boxes for certain things, but also it can be frustrating for people if it's not what they want. We've seen certain circumstances when people come in our office after they've had these, and they're like, well, they don't really understand what they have, because it can be pretty complex. So if you have one and maybe don't understand it, or wondering if you should have one, give us a call. We'd love to walk through that with you, look at all the intricate details, look at what the costs are, and what are the advantages and disadvantages to your specific situation, and how it may play a role for you.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
At Centennial Wealth Advisory, we take a holistic approach to your retirement planning. So it's not just looking at what your investments are, but what is that long-term income plan for the next 30, 40 years of your retirement? What about taxes and what role they play in your retirement plan? Estate planning, what about life insurance, health insurance planning, all key areas to consider when looking at your retirement. So please visit our website or call the number on the screen. We'd love the opportunity to sit down with you for a no-cost, no-obligation visit.
You made it. Years of hard work, investing, planning, and now you're here. The long-awaited reward you spent a lifetime looking forward to. But what now? After years of growing a nest egg, now you may want to manage it. Use it to fund your dreams. Make it last as long as you need it. And leave some for those you love. So what do? Wall Street continues to be uncertain, and some conservative options have dropped through the floor. How do you maintain opportunities for growth and reduce risk of loss from market changes? That's where we come in. We are financial professionals. From investments and insurance products to tax reduction strategies and guaranteed retirement income you cannot outlive, provided by the claims-paying ability of insurance companies. You've worked a lifetime to get here. Let us help you enjoy it to the fullest. For a complimentary consultation, simply contact us today.
Welcome to this exciting segment on financial advisors, fees, and costs. One of the best things that you might be able to do on a return on your investment is to figure out how your financial advisor gets paid. If you're sitting there saying, I have no idea how much my financial or how my financial advisor gets paid, you are not alone. Over 60% of respondents have no idea. Congress, the Securities and Exchange Commission, and other regulatory agencies have tried to make investing more consumer friendly. They run into a lot of roadblocks because there's a lot of different ways that financial advisors can get paid. So let's dive into the compensation structures. The first one that you might see is what's called fee only. This is when registered investment advisors give advice on how you might want to allocate your investments. We call this assets under management. And typically there's a 1% fee. Now that fee can range. Sometimes it's a little bit more on smaller accounts and sometimes it's a little bit less on bigger accounts. But either way, the fee that you're paying has to be disclosed on Form ADV Part 2A. They have to tell you what they're charging you. It will define what benefits you need to receive in return. The next way that you might see financial advisors get compensated is through what is called a commission. So basically here, they're going to be researching different products and they'll be giving you advice on which product you might want. These could be insurance companies that they might be offering to you, or they might be mutual fund companies. In return, those insurance companies or mutual fund companies will pay the advisor a commission. When they sell you a commission, when they sell you a product or a mutual fund, they have to provide an illustration or a prospectus. And inside those fees and the costs are going to be disclosed. The next one that you might look at is what's called a hybrid plan. These are financial advisors that are going to utilize both sides of the fee-only approach and the commission approach. What they're doing is they're trying to give you the widest range of investment options and tools that you can use in your arsenal to try to help achieve what you're trying to achieve as you prepare for or go into retirement. So on part of the portfolio, they might have an asset under management fee. On the other part, they might have get paid through a commission. The next one is you might see a flat fee. These are financial advisors that are going to help you plan bigger life events. Let's say that you're preparing for a wedding, or you want to sell a business, or you want to figure out how to go to college and prepare for that. They give you a plan, they charge you a flat fee, and then you go institute that plan. The next thing that you might see are what are called wrapped fees. These are very common employer-sponsored plans or 401ks, and they're similar to that commission-based approach. The next thing that we have to classify is the difference between financial advisor fees and investment costs. Okay, so I recently ran across an example where the advisor fee was 1%, very typical. Now, on the other side, though, it's the cost of the investments that you might equate to expense ratios. And as we dove into that product that they were sold, they had an expense ratio of over 2%. So when we were sitting there, we said, okay, let's look at your total costs. 1% advisory, 2% expense ratio, your total cost is about 3%. Those are the kind of numbers that you're going to want to ask about, because when you like to know that. The next thing that you might run across are what are called non-human advice. These are those robo-advisors. A lot of times these are pegged towards younger clients and they want some digital-only advice. Those can be very, very low cost, anywhere from 0.25 to 0.35%. The thing that I hope you take away from this is the importance of transparency. If you're sitting in front of your advisor and they ever start to get uncomfortable when they have to explain how they get compensated, to me that's a little bit of a red flag. There are a few questions that I think you should have no shame in asking. The first one, what is the total cost for me to do business with you? Fees, commissions, expense ratios. What kind of value am I going to get in return for doing business with you? The second thing would be if your asset under management fee goes up when markets go up, what are you going to do if there's a sudden drop in the market? How are you going to respond to that? Thirdly, if it's a commission sale, is there any conflict of interest? Conflict of interest arise when advisors give clients options to buy products that might not be what's best for them. They have to decide what's best for the client or what's best for them. So are there any conflict of interest? And if so, how are we going to make sure that those get mitigated? If you have any questions about how you get paid, any of the compensation structures, we are very well versed and we are super transparent here at Centennial Wealth Advisory. So please feel free to give us a call to keep your learning going.
Your grandchildren are precious to you. They are your life. This is your time to have that special relationship. Taking care of yourself is taking care of them. Centennial Wealth Advisory is offering a free, no-obligation retirement review to make sure you don't run out of money during your retirement. Centennial Wealth Advisory. Your best is yet to come.
What can Retirement Analyzer do for you? Retirement Analyzer is a software tool that can help you prepare today for your financial future. You've worked hard to save for your retirement, but as you near your retirement, you may have concerns. Have I positioned my retirement savings wisely? Have I saved enough for retirement, and will my savings last throughout my lifetime? What impact could inflation have on my future expenses? What if I suffer a long-term illness? Will I have enough money to cover my medical care expenses and still be able to meet my other financial obligations? Could changes in the income tax rates disrupt my retirement strategy? There's no need to be in the dark as you prepare for your retirement. Retirement Analyzer can help you find answers to all these questions and more. The first step is providing us with information on your financial assets, the type and current value of those assets, as well as your sources of income. Then, we work with you to identify your expected expenses in retirement. This will include a discussion of the lifestyle you envision in retirement, travel, a summer residence, whatever you dream your retirement will be. We'll input the information you provide us into the Retirement Analyzer, and in a very short time we'll have reports that show us the percentage of assets currently in high-risk vehicles as well as the percent in lower-risk products. Retirement Analyzer enables us to project your income from year to year in your retirement and see how long your retirement savings may last. As we change the conditions of the report, delaying your retirement date, including costs for long-term care, adjusting the expected tax rate, or adjusting your retirement strategies, we can see how changes in these variables may impact your income in retirement and the longevity of your retirement savings. Let the Retirement Analyzer help you test drive your retirement strategy today, because the time to discover the bumps in the road is not once your trip through retirement has begun. Contact our office today to schedule an appointment for your Retirement Analyzer review.
Let's talk about this idea of a brokerage account versus an IRA and which should you invest in. This is just simply my opinion, but I believe that brokerage accounts are vastly underutilized when it comes to retirement planning. So let's start first with a definition. A brokerage account is going to be that after-tax money. So you've already paid tax. It's money sitting, say, in your checking or savings account, and so you don't get the tax advantages that you would like an IRA. You're going to pay tax on any interest or dividends or capital gains on an annualized basis. Short-term capital gains are going to be for those stocks or funds that you've invested in and sold within prior to 1 year. And those are going to be taxed as ordinary income. Meanwhile, you have long-term capital gains. Those are positions you held for 1 or more years, and then it's going to be dependent on all of your income, but there's going to be a tax rate of either 0%, 15%, or 20%, and that's just sort of how that's going to work. You're going to get a 1099 for this brokerage type of an account. Meanwhile, as you're probably well educated on the IRA, with that, you're going to have limitations on how much you can contribute to that, and if it's going to a traditional IRA, then you're going to get a tax deduction for that contribution. and you won't pay tax as the IRA grows, but then when you go to withdraw those funds on a traditional IRA, it'll be taxable, and you'll want to wait till after age 59 and a half to take those withdrawals. You'll have required minimum distributions that happen later in life. Meanwhile, then you have like a Roth IRA. That's going to be after-tax money that's contributed, but then you would have tax-free growth and again, withdrawals after 59 and a half, but no required minimum distributions associated with that. So retirement plans are typically the primary focus of investors as they go through the years and they're trying to build savings. So a lot of the focus, 401ks, 403bs, 457s, IRAs, Roth IRAs, is a lot of times what people are focused on. But let's take a moment and create a visual here of these different tax buckets. So starting first with the taxable bucket. This is what you're going to pay tax on what you make on a year in and year out basis. It's not just taxable on what you withdraw from the funds, and you're going to get a 1099 tax document year in and year out. Then let's move on to the other bucket, the tax deferred bucket. So these are going to be different retirement accounts like your 401k or IRA. Along with that, you would have like non-qualified annuities where the interest earnings are deferred until a later date when you withdraw the money and pay tax on it. Lastly, you have the tax-free bucket. This would include Roth IRAs, municipal bonds, and then maybe properly structured life insurance. Notice how I said properly structured. There's ways that you have to set that up to ensure that then you're able to access that money later on in life tax-free. Now, here's coming back to this brokerage account idea of how this could potentially be helpful for you when you look longer term. Maybe it's setting aside some funds for a big purchase. Maybe it's paying for an automobile or down payment, or maybe the purchase of a home or condo or whatever that might be. It would be money that you could access, similar to like a savings account and everything, access that money, and you're not going to have the tax ramifications that you would with a retirement account. Another reason you may want to have this brokerage account is an early retirement. If it's your desire to retire prior to age 59 and a half and all of your money's tied up in IRAs, let's say, there are some ways that you could structure income from that, but ideally you would want to have some brokerage money. There's health insurance income planning that comes into play, or maybe you're a business owner and need some of those funds, but the key thing is brokerage accounts are available at any age. And as you're evaluating all the information on IRAs versus brokerage accounts, and hey, maybe I don't have a brokerage account right now, does that make sense for me? That's part of what we do here at Centennial Wealth Advisory, is sit down with you, just have a no cost, no obligation, second opinion on how you're positioned to prepare for retirement. And obviously our goal here is to help you plan to retire well.